Hey traders, welcome back to another edition of the Market Preview. My name is Vasily, I'm your trading coach and professional forex trader. I'm finally back to this YouTube channel, and it took some time for me to think about the things to show you. Last year we talked about many topics in trading, and it took some time to find new things. I have now a very big list of new topics, of new things to show you, to teach you in trading. I'm prepared for this year, and finally it is the first video for you. And for the first video I decided to start with the classic trend following, the classic simplest trend following setups trading forex pairs. And I have prepared for you very good example with entry, stop, targets, with the entire trend management plan, with the logic behind everything that you like in this YouTube channel. So let's start. Please don't forget to like this video, subscribe to my YouTube channel, and leave a lovely comment. It motivates to record more videos for you. Alright traders, so for the example with the trend following trading, I will show you Euro New Zealand, yes, and here we will execute the top-down analysis. Remember that for the accurate entries we need to analyze the market on daily time frame, on 4-hour time frame, on hourly chart, because all these time frames show very important information, and the reversal, the clues on different time frames help us to increase the accuracy of our predictions in trading. So here, Euro New Zealand daily chart. So why Euro New Zealand is so good for the trend following example? First of all, if we start analyzing the chart on a daily time frame, on a daily chart you see that the trend on Euro New Zealand is very strongly bearish. How do we know that? If we zoom out the chart and just follow the price action, as you can see here, we have a very nice sequence of the lower lows and lower highs. The price follows very strong bearish swings, and after some pullbacks we see the continuation to new structure lows. Yes, so you can see that the trend right here is very bearish. Secondly, if we analyze the structure, the recent structure on the left, let me show you one very peculiar thing right here. If we look left at structure, you can see that over here on the left we have very strong structure, the structural resistance. Yes, it was the very strong support in the past. The price nicely bounced from that, and right now the price is trading below that structure. And based on the classic trend following rules, we know that resistance right now can be a perfect resort for sellers to start selling. So from here, chances will be high that we will go lower and lower to lower price levels. And also I just wanted to add right here that based on the low highs that we just identified, we can draw here a very nice trend line. This trend line over here. And you can see that right now, that trend line over here and that horizontal resistance that we identified, they provide us with a very strong zone of supply, the area of extremely strong resistance. And you can see that on Friday the price has perfectly reached that structure. Yes, so for us, right now Euro New Zealand is kind of appropriate for trend following trading. Now the next task is to analyze the pair on a lower time frame. Hey guys, New Year is the best time for you to start learning trading, and it is just the best moment for you to become a member of my premium educational group. This year there is a new feature in the group. I have written the entire course with my strategy. It's a very big book with all the rules, with all the techniques that I apply in trading. In my view, it is sufficient enough to teach you the entire process that I follow each and every day trading the financial markets. And what is good, it is appropriate for newbie traders who just started trading, and it is good also for the advanced, for the experienced traders who already have some experience in trading but still don't get where are they wrong and what are they doing wrong. And also you will see how I trade live, you will see how I analyze the market live. It is very practical. I want to invite you in my premium group. I am sure you will enjoy it. So please, if you're interested, text me in one of the social networks below, or I will leave a link with more info about my group. I really want you to join. So for lower time frame analysis, we will apply the 4-hour chart first, yes? And let's just take a look at what happened on the 4-hour chart on Friday. And as you can see, if we just, here is, by the way, this is our major resistance that we identified on a daily. Now we can just take that away, and you can see that once the price reached our resistance, over here we formed a very nice doji candle, yes. And moreover, if we look left at structure and analyze the price action on the 4-hour, look what do we have right here. Here we have also very strong 4-hour structure. So we have very strong zone of confluence. That zone of confluence is based on the major daily trend line. It is based on a major daily horizontal structure, but also it is based on a recent 4-hour structure. And on that, the price formed a very nice doji candle. The doji candle was formed after a sequence of quite strong bullish candle. You know, the market was growing very strongly right here. And once that structure here was reached, we see the doji. And that doji, you know, just that doji right here is a very strong signal for many market participants. And I'm quite sure that many professional traders already shorted right here because it's very decent signal. But you know, with the multi-time frame, we also can investigate the hourly time frame and get even more confirmation there. So let's right now check the hourly chart. So let's open the hourly chart. On hourly chart, look, on hourly chart we just see more details about the price action that happened when the price formed the doji on a 4-hour. And look, first of all, again, yes, here is our resistance area, yes, our resistance zone. And let's analyze the price action there. Let's try to get what happened right there. You can see that if we just follow the price action, right here, you can see how perfectly the price started to coil, to consolidate right here. You can see that the pairs started to range. Yes, we see the clear ranging market right here. The price tried to go lower, the price tried to go higher, but you know, it was just in sideways, it was just in consolidation. And you know, if we draw the boundaries of that range, over here we have its support based on candle closes, and over here we have its resistance. Yes, so this is kind of the range that we have over here. Let me make that yellow for you. And what happened just before the market closed on Friday? You see that we closed on hourly below that range. And you know, most of the time trading the market, the breakout of such kind of ranges show us the future direction of the market. You know, as we call that the decision range, and we never know exactly where the price will go while it is within the range. But once it breaks either the upper boundary or the lower boundary of that range, it's kind of the signal for us. And here market participants decided to short, yes, and we see the violation of that range. So how we can apply that? Now it is all enough for us to make a trading decision. So now let's discuss how we will trade this decision range. So how we will trade this decision range over here? First of all, we should wait for the market opening, yes, because sometimes after the weekend the market opens with the gap up or with the gap down. So first of all, we should check whether the market will form such kind of gaps. In case of the normal market opening, just based on the prices where it closed on Friday, you know, what can we do? We can short the retest of that range. So by retest, I mean that we should open our sell limit order on the retest of the broken support of the range, yes. And first of all, let's discuss where can be our stop placement right here. With the stop placement, the safest stop always above the upper boundary of the range, yes, so just above all the highs of the range. Our highs of the range are right here, so our safe stop will lie over there, yes, based just on on the random structure but above the highs. With such kind of stop placement we will be protected from volatility, yes, and even if the market kind of bounces trying to stop hunt the aggressive traders, we will be very safe with such stop placement. And how about the targets right here? Where can be the targets for the market participants? I want to go back to the 4-hour and just analyze the structure with you, yes, and what I wanted to discuss with you right here is that our structure is the area right here. Yes, here is our quite wide structure support. You can see that in the past it tested the level right here and started to grow from there, then it went lower, started to grow from this lower boundary, then retested that and we saw the bullish continuation from that, and just recently here the price has respected the minor level right here. So in my view our safest goal will be based on the upper boundary of that structure. Yes, so just placing our goal based on that level over here, I guess chances will be high that, the market will reach that. It can be our very nice first goal. And let's just execute the risk to reward analysis right here. Let's check what risk do we have right here and what potential reward we may have. And look, over here we have 2-to-1 risk to reward, just 2-to-1 risk to reward for the initial target. In my view, it is very nice. Moreover, remember that we can start protection of our position higher. I guess once the price reaches the level right here, just the middle between our goal and our entry, we can move our stop to entry and protect our position in case of some fundamental news and in sharp market reversal. But this goal right here, this first target, is just so-called the initial goal. But remember that the price is trading in a strong bearish trend, and as we already discussed, chances are high that it will continue falling to new structure lows. So then we will apply trailing stop and we will just let the market push lower. We will let the market go lower and lower and lower, and we will try to catch a big winner trade. You can see that previously in the past over here we had very strong swings to the downside. So this time, why not? We can expect the same kind of reaction again. So I truly want you to be patient right here, and once we will be in the trade that we identified with you on hourly, let the market then go lower. Don't take your entire profit based on the first target. Let the market go lower. Let's try to follow the trend. I know that it won't be quick, but if you will be patient enough, profits here can be just enormous. And with the trailing stop, you can easily catch the wave like that. Yes, you can see how many pips were there. Let's just briefly measure. It was almost 250 pips. It was just the gigantic movement right here. And remember that we can, with the trend following, we can easily catch the movement like that. So let's see how the market will open on Monday. Again, remember, we should first of all check how the market opens. Yes, and in case of only the normal market opening based on the closing prices, we can follow the setup, and chances, the probabilities here will be on our side. Alright guys, thank you so much for watching. I hope you enjoyed this new weekly edition. I hope that next week we will make nice profits based on that trade. I truly believe that it is a very accurate trading setup, so just be patient and just follow the plan. And most of the time, 65% of the time, we are accurate in our predictions following this trading strategy. So let's hope that we will make money on that. Thank you so much for watching. Like this video, subscribe to my YouTube channel, and if you want to propose some topics for next videos, for the future videos, please let me know also in the comment section. I always read your comments, I always answer your questions, so feel free to write your comments there. Thank you so much. Good luck, guys.